Hello everyone and Happy New Year. I'm Shannon Kelly, Social Media Manager at the Toronto Real Estate Board.
And I'm Jason Mercer, the Toronto Real Estate Board Senior Manager of Market Analysis.
Now with December behind us, we can not only look at that month's transactions and average price, but also what happened throughout the entire year. Now Jason, can you tell us a little bit more about that?
Thanks, Shannon. We saw 3,690 sales through the Toronto MLS system in December, and this was down by about 20% in comparison to December 2011. Now, if we add that result to the previous 11 months, we saw close to 86,000 sales for 2012 as a whole. And this was down from a little bit more than 89,000 sales for the full year in 2011. Now, let's take a closer look at what happened to the sales trend last year. And really, when we look at the story, it's really a tale of two halves, where we saw strong growth in sales on a year-over-year basis through the first half of 2012 as households continued to take advantage of the affordable housing situation that was driven by low interest rates. But at the same time, as we moved into the second half of the year, we saw that trend reverse, and we actually saw sales down on a year-over-year basis from June onwards. And so the key issue underlying this, of course, was the stricter mortgage lending guidelines, where we saw the maximum amortization period reduced to 25 years, and we also saw a sale price ceiling of $1 million for government-insured mortgages. And at the same time, compounding this issue in the City of Toronto was the additional land transfer tax, which of course is payable up front. And all these issues combined to dissuade some buyers from purchasing a home, instead looking to postpone their purchasing decision into 2013 or even beyond.
A tale of two halves. That's pretty interesting, Jason. Now, how did sales impact price growth last year?
Well, it's a good question, Shannon. And we saw strong price growth throughout 2012, the sales decline in the second half notwithstanding. And the reason being is that market conditions remain quite tight for the low-rise segment of the market. And so what we saw is that listings for, say, singles, semis, and townhomes remain quite low from a historic perspective. So even though sales were down, we continue to see quite strong competition between home buyers, and this continued to exert upward pressure on home prices. So for example, in December, we saw the average home price up by about 6.5% in comparison to 2011. And at the same time, if we look at the year as a whole, similarly, we saw the average home price up to about $497,000. And this is up by almost 7% in comparison to 2011.
Now, Jason, there's always talk about condos in the GTA. What about prices for the high-rise segment?
Sure. So as I said, definitely we're seeing price growth being driven by the low-rise segment of the market. And so if you look at the other side of that coin, high-rise, and namely condominium apartments, what we saw in 2011 and the first part of 2012 was strong condominium apartment completions. So we saw a lot of new supply coming online with listings on the Toronto MLS system. So what that meant is we saw more choice out there for buyers. And so there wasn't as aggressive offers coming in on condominium apartments as compared to the low-rise segment of the market. And so as a result, we saw that average price trend flatten out over the course of the last 12 months.
Excellent. Now, I don't know about you, but I'm really looking forward to seeing what happens in 2013. And over this month, you can still connect with us on Twitter at TREB Home, as well as on Facebook, and have yourself a great January.